and welcome to my beginner's guide to Vanguard. In today's video we're going to be talking about what Vanguard is, what sort of things you can buy on there, and also how it works. Now I am a little bit biased when it comes to Vanguard because I do have my stocks and shares ISA with them. They are the investment provider that I invest the majority of my money with. If you've seen my Money Box Stocks and Shares ISA video last year, then you'll know that I transferred it out because of high fees. I actually decided to transfer it into Vanguard, so I've had a stocks and shares ISA with them for a little over a year now. I'm really enjoying the service, I really like it, I would highly recommend it to any beginners, which is why I'm doing today's video. And what I'm going to do is show it on the laptop. I'll go onto the website, explain it as I go, walk through everything, and just give you an overview on exactly how it works in case anybody is looking at opening up an account as well. So firstly, what is Vanguard? Well, Vanguard is an American investment provider and it was founded by John C. Bogle, who is thought to have been the first person to create the index fund. If you're not sure what a fund is, then it's a whole basket of individual shares that you can buy for the price of one. It's traded and priced as one share, but it does include a whole host of different companies in one. Investing in funds is seen as a lot more safe, but of course investing in the stock market is never completely risk-free. When you are investing in a company, you do run the risk of them going bankrupt and therefore you losing the money that you did invest into them. But if a company were to go bankrupt in a fund, that loss would usually be covered by the growth of the other companies in that fund, and most companies make up around 0.5% of a fund, so it's a really small amount that each company is worth. Lastly, how it works. Now I can't actually show you myself actually buying a fund because I'm not including my account in this video. I will be creating another video on my Vanguard account and buying one on there, so do have a look out for that video if you're interested. But as far as how it works, there's two ways of buying funds. You can either do a monthly deposit where it automatically goes into a fund of your choice. The minimum payment for this is £100. Alternatively, you can do a lump sum and just buy a singular fund at one time, and the minimum payment for that is £500. Now I realise for a beginner this is quite a large amount of money. £500 for a beginner to invest is quite a huge chunk, I would think, but I think the £100 for a regular monthly outgoing I think is quite reasonable, and I would recommend doing that if you can afford it. And lastly, before we jump in and have a look at the website, I just want to say if you are new here, hi, my name's Katie, and I would really appreciate it if you do find this video helpful, if you would give me a like and a comment, and if you really liked it, a subscribe would be great. It really encourages me to keep making content. Okay, so immediately when you come onto their homepage, one of the first buttons you'll see is our fees, and Vanguard is well known for having really cheap fees. They are one of the cheapest investment providers around, which is one of the reasons that I decided to go with them. Those of you that did watch my Money Box Stocks and Shares ISA video will know that I actually cancelled that account because of their high fees mainly. So yeah, comparing that to Vanguard, I have saved a lot of money. So let's firstly go on to our fees and have a look at what they are. And immediately you'll see that they are recommended provider by Which for 2020, and I think that they have had this award for the last 3 years, so they are quite good at this. And there's two different fees that you have to pay for Vanguard. So firstly they have an account fee, and this is like the admin fee that you just pay for having an account, and this is 0.15% of your investments per year. And also they have the fund fee, which they call the ongoing costs, and that's dependent on the fund that you buy, so they all have a different price, but the average, as you can see here, is 0.2%. So overall, on average, you're looking at around a price of 0.35%, and this is of your investments and it's calculated yearly. Also a nice little thing that you'll see here is that they do cap it when you reach to 250,000, so you only have to pay £375 a year once you do get to that point, but I don't think we'll be there for a while. I certainly will not be, but that is nice to know. And obviously if you do plan to hold long term and keep investing, then you very well might well get to that point in say 30 or 40 years. They also have an example here. If you invest £200,000, then I think it would cost about £82 a year to invest, which if you think about it, I think is really quite reasonable. And then here, one of the key things I think about Vanguard is they are really beginner friendly, and they do explain everything. If you're not sure, there's always a place on the website you can find out more information on. So here you've got your fund management costs, what's included, so you've got your ongoing costs, your transaction costs and your one-off costs. When it says fund transaction costs, this is really nice because you don't have to pay for any transactions. So a lot of investment companies do charge for a transaction. So for example, they will charge £10 per trade. So every time you want to buy and sell, you have to pay £10. So you're minus 20 for every trade that you do. Vanguard, they don't do that, which is really, really nice. Although I guess they do sort of even that out by having their minimum lump sum or monthly payment of £100 and £500. So I guess they sort of discourage people from sort of day trading or trading not for the long term. I think Vanguard is very much aimed at buy and hold investors, which is certainly what I'm doing. And then if you click on the little eyes, then it shows you more information about what the account fee is, for example. Yeah. And then how do I pay? There's 3 different options to pay for these fees. You can either pay for them in direct debit straight from your current account. You can pay for it in cash that's sitting in your Vanguard account. So they have a separate sort of cash pot that you can put money into, which can pay these fees, and you can also buy investments with that cash fund. And lastly, you can also pay with the investments that you have. So if you don't set up for either of these, then you can pay with the investments and they will just sell one of them to pay for your fees. I really wouldn't recommend that because certainly for a beginner your fees are going to be really, really small and you're going to be selling off £100 funds just to pay off your account fee. So I do it via direct debit, but cash is also fine. And again, here at the bottom they've got more examples of what you're actually paying for. So over £250, no charge, and no charge for transfers or for transactions or for closing your account. It's all free. Some people, some companies do catch you out by having sort of closing or transfer out fees, but there is nothing like that here. And at the bottom here they've got a little bit about compounding, so if you're not familiar with what compounding is, then you can learn about compounding there. One thing that I would say about Vanguard is that they do make it really accessible for everyone and they are really beginner friendly. So they explain everything, they have little eye bubbles everywhere, so if you're not sure what something means you can always click on that for more information. And here at the top you'll see that they've got an investing education tab, and this is really, really helpful. So you can click on learn about investing and it will take you through all the different stages and what it all means. Investing doesn't have to be too complicated, and it really isn't. I mean, this is the first major investment account that I opened, and I found it really, really easy, and it really did increase my confidence in investing. So that is my little pro Vanguard speech. So it shows you stage 1, open an account, stage 2, choose a fund, and stage 3, decide how much to invest. And here you'll see it says £1 a month or a £500 lump sum. If you want to learn more about choosing funds, find the right fund that's right for you. And again, it takes you through all the different options that you have. These are 2 funds that Vanguard run, Life Strategy and Target Retirement. I will go through those in a bit more detail on the funds page when we look at what funds exactly they do have. So you can build your own portfolio with a mix of different funds, which is what I'm doing, or you can get a ready-made portfolio. So if we go on the Why Vanguard page, 4 simple principles. Again, we don't think it has to be complicated, very friendly. 4 simple principles: goals, balance, low costs and discipline. And I think they are really, really keen actually. I won't go through everything that they say, you can probably have a look on your own at this website. Stay balanced and disciplined, I think, are really key. If you go on to help and support, you'll find all sorts of different questions, which even if you don't have a question, it can be quite nice to go on here and just take a look at some of the questions and answers on here. You might find that you earn a little bit, earn knowledge. They also have a pension calculator, which is under investing education, and it will show you how much pension that you could have in the time that you've got left before you want to retire. So you can enter the details of what you need. So if I put in £1,000 per month for what I need to retire, and I put in my ages, I'm 26 and I'm hoping to retire by 60, let's say, put £500 away a month into my pension, and I currently have £6,000 because I have a workplace pension, then it's showing that my estimated pension pot will be £337,000, and I am on target. I've included my state pension of £700. Of course, we can't guarantee that we will have a state pension, so if not, then I'm not on track. I only have £840, but that's quite fun to play around with. I do suggest you have a look at that. It might encourage you to invest a bit more money. And they also have this little Our Latest Thoughts section, which again is quite interesting, sort of a bit like their newsletter. Read a bit of articles, a bit of blog, shows you some more things. What would a personalised retirement savings plan look like? Inflation, all you need to know about current pension allowances, all sorts of different information, UK economy, currency movements, that sort of thing. Anything if you want to build your knowledge, that can be quite helpful too. Before I go on to all the different types of funds they have, I just want to talk about their different accounts. So they do have a pension account, a stocks and shares ISA, a junior ISA if you want to open one up for a child, and also they have a general investment account as well. So I would suggest opening a stocks and shares ISA if you don't have one. Obviously you're only allowed to have one with one provider, so you do have to pick carefully depending on what you want to invest in. And if you don't know, a stocks and shares ISA means you can have £20,000 a year worth of tax-free savings, which means you won't have to pay tax on your investments when you withdraw them in later life. Okay, with that being said, let's take a look at the full list of funds that they do. And they do have, there you go, 76 funds available. So at the top you'll see the tabs here. So you've got the name, you've got the charge, which is what we were talking about on the ongoing charge in the accounts fees section. So this is the price that you pay. Asset allocation, which is how much is equity and how much is bonds. If you don't know what a bond is, then you're lending money to someone and they will pay you back with a little bit more interest, so much more secure. You've got your risk level, which is out of 7, industry standard. I think all investment providers use this risk rating. And then at the far right, you've got little tick boxes, which means you can sort of add things to your basket. So let's take a look and see the full list. So 76 of them. They've got their life strategy, which is a Vanguard sort of own brand of funds that they have. They also have target retirement funds. We'll go through both of those in a little bit. And then you go down, they've got a global balanced fund as well. And then we go on to the equity ones, which are all 100% equity, no bonds. So we've got Europe equity, and you'll see here it says developed Europe ex UK. So you can buy funds made up of European companies without the UK. You can buy Germany, you can buy total European. Again, they've got the risk assessments here. Global, we've got global funds, ETFs, all world, developed world, ex-UK, so you can have a world fund without the UK. All sorts of different funds here. UK, they've got active UK funds. You've got the FTSE 100, which is the top 100 companies in the UK. FTSE 250, top 250. All share and equity indexes. Japan, you've got the FTSE Japan, which is also the top companies in Japan. Asia Pacific, so they're sort of continental ones. You've got Asia Pacific without Japan, Pacific ex-Japan stock. USA, FTSE North America, S&P 500, which is the top 500 North American companies. And then we move on to emerging markets, which is sort of developing countries that they're not top grade at the moment, but they seem to be emerging, sort of growing and showing good progress in the economic market. So again, we've got different varieties there. Fixed income, now these are the bonds. So you can see here they've got 100% bonds, so these are more safe. And they are only risk level number 3, so you can choose which type of bonds you want. If you want European, global, UK bonds, and again you've got UK government bonds, and investment grade bonds, and we've got different types of risk here. Short-term investment grade bonds, Japan bonds, USA bonds, all sorts of bonds except for James. Okay, I just want to take the opportunity to point out the active sign here. So if it says active here in yellow, then it means that it's actively managed. And basically what this means is that an investment manager is managing this portfolio, so he or she is deciding what to put in this investment, and they are sort of doing what they think is going to work out the best. So you've got a professional working on that fund themselves. Most of these funds follow indexes. As I said, John C. Bogle was the creator of the index fund, so the majority of Vanguard are index funds, and these just follow an index, so it's just a list of companies. For example, the top 100, it just follows the top 100 in that country or sector, for example, whereas active is more trying to beat the market than following the market. So you do have to pay generally more for an actively managed, because there is somebody putting in their time and effort into that fund. So you'll see here that the ongoing charge is 0.48%, whereas the majority of the others are around 0.2%. Okay, so let's just click on one. Let's click on this one. So we've got FTSE Developed Europe ex UK. So this is Developed Europe without the UK. And it's risk level 6, and again here, if you're not sure what something means, you can just click on the little arrow and it will show you more information on what that little box is showing you. So the price for one share of this is 31.20, and you'll see the change. I think this is since yesterday. It's gone down 6 pence, which is 0.19%. There's all sorts of different information and graphs on here. So here you'll see past performance. This is showing you the last 4 years. Grey is this fund, and benchmark is the fund or the index that it's following. So you'll see that they always give you two. They'll give you the result of the Vanguard fund, and they'll give you the result of the index that it's following, so you can compare how well it's following what it's actually supposed to be following. And you'll see on the left here it says dividend schedule quarterly, so you'll get a quarterly dividend with this fund. And then past performance based on a lump sum investment. So this shows you a little graph of what the history of it is, and you can hover over it and see. So this is a German fund, so it's in euros. And that in 2016 it was 10,000, and it's now worth 16,800. And if we go up and change tabs, we can see more information on the price and performance of it. So here we can see more of the history of how it's done in the past. So this is the chart where you can sort of change it. So this is showing you the last week. You can change it to 1 month, 3 months, 6 months, 12 months, 18 months. I usually just go for the largest amount of time because it shows you the bigger picture of how it's done. And we are approaching 18 months of the coronavirus dip, which is quite scary actually, that time's flown by that quickly. But you can see that one share was 33, and then it dropped by about, what, 33%? That's about 2/3 of what it was before. But it's quite clearly made that up now, it's at 36. So. And then you've got more bar charts here. So if we go annually, then it shows us a chart of all the different years. So the benchmark again is the fund that it's supposed to be following, or the index it's supposed to be following, sorry. And that was 10%, and the total return on the fund in Vanguard was 11.2, so that's quite good, it's beat it. This is why we talk about the average of the stock market, because obviously years have dips and they have peaks, and it's all about just taking the average of what it is. So it's made 11%, 3%, 12%, minus 10, 27, and then 2.5. It's only 1 year that it's made a negative, so the value of that investment in 2018 went down by 10%, but all of the others have made a profit. So if you look at the bigger picture, your money will still have made a profit if you had kept it in that time. And usually, not always, but usually, after a year where you've lost money, you usually make more money than the average. So you can see here, it was minus 10, and in the following year it went up by 27%. Again, more charts, they've got all sorts of different charts here. And the key thing here is, you'll see it on any investment provider, is they say past performance is not an indicator of future performance. So don't look at that and think, oh yeah, I'm definitely going to make money. There is always that risk that it might not. If we look under portfolio data, you've got all sorts of different things here. I don't know exactly what all of this means, to be honest with you. Region exposure, so 100% Europe, that's where the regions are. And then you can see the allocations for each country, so mostly in France. Here you'll see 22% of the fund is in French companies, and same for Germany, Switzerland, Netherlands. You'll see the proportions of which countries. And then at the very bottom, oh, and the sector as well, industries, financials, healthcare, things like that. And you can see at the very bottom exactly which companies are in this fund and what percentage of that fund they make up. So it always starts with the top, so the biggest one. So Nestle, I think is a Swiss company, so that's 3.89% of the fund, and I don't think you'll see above 6% of a proportion of a fund on Vanguard. I think that's the highest I've seen. I haven't heard of some of these, but yeah, it's 478 pages, so there is a lot of companies in this fund, and you can just go through and see all of them and which percentage. So already on page 2 you're under 1% proportion, and if we go to the last page you'll see 0.002%. So you'll see some companies that are really small percentages of these funds, but if they're sort of seen as developing or maybe a little bit more risky, then they'll put a really small percentage of it in there. But it does mean that they're probably more likely to grow. A startup company might make a lot more growth in a small amount of time, so they might be worth putting it in. But yeah, you can see a total list of all of the companies in a fund at the very bottom of the portfolio data. In distribution history, I don't tend to look at this. This is all about the dividends, I think, so it shows you on the most recent amount that a dividend was and the date of it and the date that it was actually payable. So the record date is the date that they sort of calculate it and process it, and then the payable date is the date that you would receive the money. And then cost and minimums. So again, it's just a little show off of Vanguard here of how little their costs are, and it shows you what a good price it is. So yeah, that is all the information that you'll see on a fund. This one doesn't actually have the choice between accumulation and accumulation and income. So if I find a fund that does have a choice, okay, so here, if it's got this little drop down available in other share classes, you've got the choice between income and accumulation, and this is how your dividends get paid to you. So you can either reinvest your dividends and ask Vanguard to do that for you automatically, or you can ask them that they pay your dividends into your bank account. Accumulation is reinvesting and income is being paid into your bank account, as that will be treated as income. If you invest it through a stocks and shares ISA, then you don't have to pay tax on your dividends, but if you do not invest it through a stocks and shares ISA, then you are liable to pay tax once you earn over £2,000 in dividends a year. Let's go back to the life strategy funds. So these are a Vanguard own sort of brand of funds that they have, and you can see the different risk levels go up. So they've got 20, 40, 60, 80 and 100% equities. So depending on how much, I guess, safety you would like to see in your investments, you can choose a percentage of equity, which is money invested in companies, or bonds, which is lending money for a certified amount of investment back. So I'm quite young and I'm investing for the long term, so I would always choose the 100% equity. But if you are starting to reach your later life and you're looking to draw some money out of it, then you're probably wanting to look more into bonds so that your money is more secure. And any severe market dips do occur, then you'll be able to sort of claw back some of your money. So that's what the life strategies are. And it's a similar thing with target retirement. So the idea between the target retirement funds on Vanguard are that you choose the date that you're looking to retire. So they've got 2015, 2020, 2025, and they've got every 5 years up to 2065, depending on what year you would like to retire. I am looking to retire around 2055, so I could invest in that one. Now I think, don't quote me on this, but I think that the investment managers change the proportions of equity and bonds as time goes on. So you will invest in, say, the 2055 target retirement fund, and then as the time gets closer, they'll start investing more of that into bonds and increase the proportion. So you'll see the 2065 is 80-20%, but the one that's 2025 is 58% equity and 41% bonds. So as the time gets closer to your retirement, then the proportions differ. And that's quite nice because you don't have to worry about sort of changing what you're investing over time, or sort of selling them and then reinvesting it into a different fund to suit your changing needs. It's quite nice because it does that for you, and you can just invest in it and hold it long term and just sort of let it do its thing. So yeah, that is basically all of the funds sort of explained. There are many different types of funds. As you see, they've got 76 of them. I'm not going to go through all of them. That is my Vanguard beginner's guide over. I really hope that was helpful to some of you at least. Please do drop me a comment with some feedback or any questions that you have. I'm happy to answer them. And like I said earlier, please do give me a like and a subscribe if you did find it helpful.